So guys, okay, it's our part 5. So in part 5, I will try to be lenient to also accommodate those who are new. So here I will go in full details on how to track or how to trade the order flow before even applying our strategies of order blocks and stuff. So here, remember what is order flow, is the study of how the market orders enters the market. So okay, here is this another scenario. Here it is. If you can see, guys, we are having our downtrend here. You can see, if possible, we are having our downtrend. Then we are having our consolidation there. Then we are having an uptrend. Just that the uptrend, it was not that like usual ones, but it was an uptrend at the end of the day. You see the price moved up. So the thing why I'm saying uptrend, downtrend, just that I want you to be able to see that, okay, in this condition we're only looking to buy, in this condition we're only looking to sell. So let's come with the price. You can see, if we check here, we can see that the prices are moving in a form of zigzags, a downtrend. We know the properties of a downtrend: higher low, higher low, higher low, and then lower lows, lower lows, lower lows, lower lows. This is a downtrend. Do you understand? Here's what I'm trying to say. Here's what I'm trying to say. Here's what I'm trying to say. Yes, here it is. 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 Isn't this a higher high? Higher high. A higher low, I mean. Higher low. Isn't this a higher low? Higher low. Higher low. Higher low. Okay. Then these are not lower lows. Lower lows. Lower lows. Lower lows. So guys, we must move fast. That's why I can't be showing you lower lows, lower low. But then you can see what happens. Moving in a form of zigzags. 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 But there is a situation, or there is a condition where the market will stop creating lower lows and higher lows. Here's the thing. If you check, this is our what? This is our lower low, right? Then approved, lower low again. But what happens? You see, our now structure is cleared. This previous higher low, it's now cleared in such a manner, or in such a condition of having another swing point that is above the previous higher low. So this is a nice change of character, or a break of structure, or a shift of structure. So the thing for Tina, guys, for us, we must be able to see that the price or the market is going to clear the previous higher low before even it arrives there, because once we see it here, it's too late for us. We must trade this. So we must see, the aim is to see this move before it happens, because from here to there, it's a nice, I can say it's a nice opportunity for one to trade. Do you understand? So okay, now we're studying the price. Remember, dealing with order flow. How do we see that the market is no longer interested in selling? If you can check, in a downtrend, we are having what we call retracements. These are retracements move. These are retracements, retrace. Then these are, we call them what? Impulsive. So what does it mean to the impulsive move? Here's an impulsive move. Impulsive move, it means that it's gonna be a long move compared to what? To the retracement move, because this is the move that is favoring the trend. So meaning that in a downtrend, every time when we're having an impulsive move, we're gonna be having big bearish candles or long bearish candles. Do you understand what I mean? If you can try to check if I'm lying. Then let's prove. If I'm lying, then you'll tell me, no, whenever you are mad, you are lying to us. So guys, if you can check, just that let me zoom in a little bit. or let me make it like this. Let me change the colors. Bearish bear candle red. Yeah, I want you to. So I meet many people are used to red and green. So if you can check, since this is a downtrend, which candles are longer in bodies? If you can check, starting from there, you can check nicely, guys. Obviously, you are going to have long bearish candles or long red candles because this is a downtrend. So this is an impulsive move. You can see these are impulsive moves. These are impulsive moves. Even if they reject, but at the end of the day, you can see that they are bigger compared to what to the green ones. So this shows that okay, the market, the more it makes the bigger candles for the bearish trend, it means that the trend is still strong. And then you can see so that's how it is, guys. So the thing that is like the reason I'm showing you this is because I want you to be able to see what's happening here. So if you come to this scenario, guys, if you can come to this highlighted scenario, you will see that no, something is wrong. The market is no longer selling. Why? Because it's now consolidating. This is a consolidation in a lower time frame or accumulation. So let me show you nicely. Check. Remember, this is it's a 15 minutes time frame. So I'm gonna switch to a lower time frame. I'm gonna show you up to here. You see here, the market is no longer going down or up, but it's going inside in a range. And what happens there? The thing that is happening, you can see now the bearish candles are no longer to that point. So now we are starting to having some big green candles. This is order flow. It means that it shows us, or it's giving us a signal that okay, there are many buy trades that are getting into the market now. So sellers are now about to lose control. Then if you can check, what I was saying is this one. You see on a lower time frame, now it's 5 minutes. You can see that no, the market is no longer going up or down, but it's consolidating. What does this mean? It means accumulation. What does accumulation mean? Accumulation, it means that the market is busy generating liquidity in such a way that once it moves from inside this block, it will move non-stop, or it will be more liquid. The moment is still consolidating inside this zone. The moment is still consolidating. The moment is still consolidating like this. It's accumulating liquidity, it's generating liquidity, and once it moves here, it will move in a liquid manner because there are many trades that are placed in the market. So in such a way that mostly if the market is in accumulation like this, if it breaks below, if it breaks here, know that the market will move in the upside, to the upside. But if it breaks above, know that if it creates a liquidity injection that it's above, the market will move downwards. So if I'm lying, let's see what I mean. If I'm lying, let's go back to 15 minutes so that you can be able to see nicely. But even if it's here, it's fine. You can see now we extend our zone. What happened? You see the thing that happened? The market, as I was saying, it created this is called a liquidity injection. I'll create a separate video explaining what it's a liquidity injection. So you see it created a liquidity injection that it's below. Then where did the market move up? But then if it was here, liquidity injection, it was here, the market was gonna break below. So this is something that is triggering small traders in the market. Simple like ABC. I'm done with that part. I'm clearly done there. So this is what I wanted you to know, guys. So if you check in the 15 minutes time frame, where did the market finally move? Upwards. You can see upwards. Then it came back and retested on this. So on upcoming topics, you'll end up knowing the concepts of SMC, because somewhere somehow there will be something like this where the market will come after some time and retest here. So let's just have patience. So I was just trying to explain to you that there is liquidity injection on this set 11. So So here I was trying as to say, guys, that on the upcoming sessions or topics as we go, I'm gonna be introducing something like this, where the market, you can be able to know or wait for an entry, then it will come back and do something like this after a liquidity injection, something like this. So guys, just stay tuned. So here, guys, the thing, let me zoom out. The thing, it was for me to show you what happens if we're having such condition. It's a downtrend, and then we study the price, then you can see this accumulation. It's an accumulation level or zone, and then it creates a liquidity injection below, and then from there, boom, it's going up. So if I zoom in here, I want to show you nicely. So when the market is doing like that, and I want to show where do we enter the trade. So where do we enter? Where do we enter? Because I know many people are still confused. So you'll learn more on how to place trades and when it comes to applying strategies. This is just a theory that you must know. If we zoom in, or if, yeah. So guys, here the thing is that, or the secret, when the market breaks below, or okay, let's go to 5 minutes time frame. When the market creates a liquidity injection, it means that the move that is going to be upcoming, it's gonna be a nice move. So the moment the market creates a liquidity injection like this, it's when once it comes back above, it's when now you start putting buy trades. Then where do you set stop loss? Stop loss below, somewhere here. It's just that I can't zoom out my chart because I'm drawing. So you set stop loss below the liquidity injection, then you buy inside this zone, then you set stop loss below this level. Then what happens? Boom, you won. That's how we do it, guys. That's how we do it. In another ways, this is what I mean. Let me zoom out. Set stop loss. You see here, you set somewhere few pips below there, and then what happens? Once the price pushes back, you start buying from blue. You can buy many trades as you can according to your account size. See? So me now, when I buy trades, guys, when I put trades, I put them with confidence. This is why I'm having a lot of trades on my chart mostly. So, and then you put your buy trades there, and then stop loss is the one that it's on our red level or a red line. Here it's a red line. You see, so Mina, I don't set TP. Do you know why? The reason of disadvantage of setting TP is that you limit yourself to profits, because the moment you set your TP, obviously, I'm 100% sure you'll be setting your TP somewhere here. And then you check where's the market moving. Check. You see, you are losing a lot of pips of profits. So the only thing, you wait for the market to go out from the zone, and then after breakout, this is a breakout, the market will break out from that zone. But this first breakout or initial breakout, it doesn't mean that the market will go up and it will never come back inside the zone. So initially, when it breaks out, but wait for it to come back in the zone. So on the upcoming strategies videos, I'll be showing you some strategies on how to trade this such a second movement. So this is giving a second opportunity to those people who've managed to miss the first breakouts, and then they can be able to put their entries somewhere here. So at the end of the day, what this means, it means that the market, when it breaks out, initial breakout or the first breakout, you relax. You don't add any trades, because remember, your initial trades are these ones that you've added here. Then you relax, it comes back, it retraces back from the zone, inside the zone, and then it's where now you're gonna be busy adding your more trades. So at the end of the day, you won your trades in a bigger picture, in a simple way. This is SMC, this is order flow. So guys, peace. This is the end of our part 5.